Testing. DB, can you hear me?
Yeah, all good. Good morning.
Hey, man. How are you, man? Scott, hold
Doing
on.
well, doing well.
Why is Scott on stage? He's meant to be on a boat somewhere. Can he actually hear me? Is that someone using Scott's account? All right, am I glitching again? DB, can you
Maybe
still
he
hear me?
just
Ah,
really
perfect, can
missed
hear
you,
me.
Mario, and he didn't want to have to spend a Monday morning without you.
I don't know, man, because I did get a message from him last night saying, Mario, make sure you cover for me because I'm on a boat. So it doesn't seem like he missed me, but we'll go with that. Let's dig into we've got the panel immediately filled up. It's pretty good. I want to dig into directly to numbers, and then I want to get into the market, looking at the markets as well. But just looking at the Bitcoin and ETH ETF, one thing I was asking about last week, especially after Black Monday, and I know we discussed it briefly. You weren't on stage, so I want to get your take on it. We discussed it briefly. I think it was someone else from Bitwise regarding your clients' reaction to Black Monday. Did you get a sense of fear from them? Because based on the person we spoke with from Bitwise, I can't remember who it was. Um, they didn't seem to care much.
Yeah, that's exactly right. I mean, that was the incredible thing. We got a few phone calls asking what was going on, but almost all of the phone calls were about whether this was a good time to buy, not whether it was a good time to sell. We saw net inflows across the complex of our products. That was true at many of the providers, not all of them, but we each serve a different clientele. So, our investors, I think, demonstrated that they're in it for the long haul. They saw it as more opportunity than risk. And I suspect that's what we would see if we saw another sharp drawback. I really think people are pretty diamond hands in the ETF space right now.
And that was a debate that we were having in the early days of the ETF's launch. So that was just another test, and obviously today there has been a fair bit of volatility. It's going to be volatility throughout the week. Um, how have they reacted to volatility so far? Because the
Yeah,
argument that there's two arguments being made. One of them is that those institutional investors are sophisticated, and they would not be reacting to fluctuations as we saw last week. Yet last Monday was pretty brutal. And the other side of the argument is that they don't believe in crypto like we do, so they could not. It's hard to believe that they're diamond hands.
yeah, actually, this is the thing that I think people miss. If you're a professional investor who's allocating to crypto, even today, that's a risky move from a career perspective, from a reputation perspective, from a peer perspective. You're sticking your neck out. And what that means is that the people who are doing it in the early days, and we're still in the early days from a professional investor perspective, they aren't like 51% confident. They have to be 80, 90, 100% confident that crypto is going to matter more in the future than it does today, or else they're not going to do it. At Bitwise, if we go back, we had net inflows into 2018. We had net inflows through the FTX crisis. And the reason for that, the thing people miss is that the only professional investors who are jumping into this space are not dabblers. They're people with very high convictions. Anyone who's like 51, 49, maybe this is a good idea, they're sitting on the sidelines because the career and overhead risk is too high. So I think that's why you've seen ETF investors generally be diamonds hands. And I think that will be true until this asset class sort of matures from a professional perspective.
And your thoughts on the argument as well that the all these people are allocating, all these investors are allocating a very small portion of their portfolio into crypto. So that portion is not really going to impact their overall portfolio significantly. Therefore, corrections of 10, 20, even 30%, while it could be significant for us who are a lot more deeper in the space, for someone that has 1, 2% of their portfolio in crypto, it's not that significant. Is that a fair argument as well?
That's absolutely a fair argument. Yeah, if you have 1 or 2% of your portfolio in crypto, who cares, right? If it goes down 10 or 20%. I'll be honest that a lot of our investors probably didn't even notice. They had other things to worry about. On Black Monday with the Nikkei down 12%, they're freaking out about the 60% of their portfolio. They're not surprised that Bitcoin is volatile, and they're certainly not doing anything about it. Now, at this phase, they want to see research that shows, why Bitcoin does well when we recover, which there's strong research that suggests it strongly outperforms in market recoveries. But yeah, absolutely. During a crisis, with a small allocation, Bitcoin's not something that they're worried about. They expect it to be volatile. They know it. They've seen it. That's why they bought it.
I want to go to the whole carry trade that triggered Black Monday. Jonathan or anyone else could jump into that discussion. But has anyone been looking into it? Because it feels like in the financial world, everything is so levered up that you just don't know what could blow out. and it could just change everything for all of us. Something that no one was talking about just 2 weeks ago suddenly became the main discussion after Black Monday. Has anyone been looking at what percentage? I read somewhere the majority of them, like 70, 80%, have already been unwound. What percentage of these carry trade positions have
Yeah, but
already been unwound?
Morgan Stanley also said in that same tweet that you're talking about, they said something like, but with a very high probability of risk. So in other words, like almost saying um, uh, we think, but we don't really know. I think that's what they were saying, and I think the number's way big. I doubt that. I doubt that half of the cash and carry trade has actually been
No
reversed in
way.
one day.
Yeah, no way.
No way, not a chance. I mean,
Agreed.
I think the cash and carry trade is anything between 3 trillion and 20 trillion. And I think that what was unwound was very, 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 very small. Very small. Like it was the canary in the coal mine. And I think we need to look at a couple of things regarding this cash and carry trade. Number one, the Japanese calmed the market by saying, look, we're not going to increase rates again if we think it's going to have an impact in markets. Now, when I did a show about that, I called that a pinky swear because I think it's as effective as a pinky swear that we used to make when we were little kids. Mario, I know you still do them now, but like we stopped doing them when we were little kids. But it's a pinky swear because as soon as Japan gets inflation again, they're going to have two options: let inflation run rampant in Japan, or increase interest rates. And already this morning, an I think it's a minister or governor or something, he came out and said, "Oh, they may look to do it again in March." And so I think that the cash and carry trade still has a very, very, very big. It's still open, and there's a very, very, very big chance that at some point it's going to unwind. Now, the question only it becomes: is it going to unwind in the form of a soft landing, or is it going to unwind in the form of a hard landing? That's the only question here. But at some point, it has to unwind. The second stat that I read this morning, I was actually doing some more research just to see how we did. But the Bank of Japan owns 80% of the country's ETFs, 7% of the entire stock market, and 55% of all the Japanese government bonds. You're literally talking about a bank that's printing money and using it to buy up its own country with the money that it's printed. Literally. Like 80% of the country's ETFs and 7% of the stock market and 55% of the Japanese bonds are all owned by the Bank of Japan.
They would literally have to call their own debt.
But can I just point out one thing, guys? Next week, 22nd of August, I believe, is the day the Japanese CPI comes out. It's projected at 2.8%. If it's even a smidge above that or gets to 3, you can forget it. They don't have a choice. They're going to have to raise rates. There's no way
That's
they
what I
can
say.
just
It's a pinky
yeah.
promise. It's a pinky promise at best.
Yeah. They have
It's a
no,
pinky
so
promise.
it's hopium. We're hoping inflation isn't going to get worse, and if that's the case, then we cannot raise rates. But if it gets worse, they don't have a choice. They have an aging population. Inflation is going to eat away at the aging population's funds, and they are very concerned about this. And all they're doing right now is calming the market down because they don't want to spook everyone, and they're hoping that inflation comes down by itself.
And you also got to pay attention to what the Bank of Japan and the Ministry of Finance is. Now, in currency trading, we call the yen, I'm an old school currency trader, call the yen the widowmaker, but it's also what's called a dirty float, where you have free floating currencies and the yen is a dirty float, meaning that the government and the bank, whenever they want to, they, without forecasting, without anything, they can just jump in and intervene. They often do it at low liquid times whenever. But the other thing is that you got to pay attention to what the officials are saying. They use words like watching, undesirable. The most recent comment from the ex BOJ guy, Japan's done the equivalent since October of 22 of fuck around, find out, where they will keep saying they're watching things. Everybody tries to say, oh, they're bluffing. They don't bluff. They will pull the rug when it's the worst time to do it, and it's going to cause the worst amount of harm to the most amount of people. And like Vinny said, if it's up just a little bit of a tick, they're going to have to bump it up.
Yeah, and there's a compounded risk, by the way. this week we have CPI numbers for the US and PPI, and the next, and then the Fed meeting comes up a month later. So if the Fed goes and cuts while Japan has to raise, that carry trade just goes nuclear.
But the heroin that is the carry trade is over 6 days it's gone up almost 650 pips the dollar yen. I mean, it's back up to 148. Maybe I haven't checked since a couple hours ago, but I mean, people are still wanting to milk that cow, and that cow's going to start kicking them in the face here pretty soon. This is not something I would want to be hanging on to.
So Vinny, what all around, what percentage of the carry trades do you think have been unwound so far?
I think at peak it was 20% in the move. I think everyone had caught with their pants down, and they either posted collateral or they had some margin left. Potentially, it's not everyone runs at like 20x margins on the carry trade. So I think 20% max, which is probably, in my opinion, I don't know for certain, $1 to $2 trillion got unwound, and then I think they took the positions back the moment they reverted because the market bounced back pretty hard. So it was a kind of a very elastic sort of move. Because the reason it moved was that they surprised with the 15 basis points above forecast, and they threatened more, right? So then the moment they backed off those threats, the carry trade went back on. So I think we're still sitting with, who knows, somewhere between $5 and $10 trillion in the carry trade.
Yeah, and when we talk about positions being unwound, how does that work? Is that the only way to unwind a position is just pure liquidation, or could you have that leverage move from one asset class to another through other means? How does it? It just seems
No,
too complex for
it
me to
just
understand.
depends. It depends on whose account, which hedge fund, which family office, how they've applied leverage, what collateral they got in account, what percentage of the portfolio it is for them. Everyone's different, but it becomes a pain trade it's really the currency that affects things, right? So the interest is less of an issue. It's the currency because you've borrowed yen to buy dollars, and then the moment the yen's strengthening, you're losing more points on that than you are paying in interest.
And then, so if the central bank is forced to increase interest rates, what would that mean for the global economy? How concerning is it? You obviously you've had all that fear back on Black Monday, people comparing it to '08. Could that have been, first, could it spiral out of control? Could you have other leveraged assets around the world that no one's paying attention to start to be impacted as trust is eroded? Or is that an overreaction?
Yeah, I think the good news, the silver lining in this, is that everyone's now aware that there's a problem in the carry trade. So I think a lot of traders will probably be positioning themselves a little bit more defensively than just being all gung ho. People are going to be watching the CPI numbers from Japan, seeing what the US does. I'd be surprised if there's a big blow up right now because it seems like things have kind of normalized. And if they do have to raise rates, it might be a bit more orderly. Don't know for certain. I can't predict what other people are thinking. But in my mind, if I was in the carry trade and I'm not, I would be paring down my position, taking a lot less leverage, and just waiting it out because it's a very volatile situation.
Yeah, another thing as well, Randy, you were talking about this in your show as well, the weakness in the US economy. I think unemployment rate has been rising, been gradually rising, and then it's just spiked up recently as well. So the American economy is just starting to show weakness. How would that impact crypto in your opinion, and what would that mean for the rest of the this cycle, at least before the market recovers?
I think when the Japanese cash and carry trade came tumbling down, I made a couple of predictions. I'm glad to say all the predictions have come right, except one that's less to come right, which is our forecast. There's going to be one more rate. There's going to be a rate cut in September. I think that the market's dreaming if it thinks it's going to get a double rate cut on its first rate cut. I think it's going to be a single rate cut. And I mean, the market was then forecasting like multiple rate cuts thereafter. At one point, they were forecasting the equivalent of 2%, of one full, so 2.5% rate cuts this year. I think we're going to get at best 0.2. We're going to get 0.25 in September, and we may get another 0.25 sometime between then and the end of the year. I don't think that Powell's going to rush to all of a sudden reduce the interest rates. I also
Ron,
don't think that.
you're speaking from my handbook. I've been
Well,
saying
no,
that
no,
since.
Vinny. Our bet is you said that the next move for the Fed is going to be a rate increase. That's
Uh,
what
b-
you said.
no, hold
We
on,
have it recorded,
hold on,
sir. We recorded it,
hold
sir.
on,
We took the bet.
hold on. Wait, just wait. So last year, I did say there'd be 2 to 3 this year, and everyone said 7. I still don't think, it's fair to complete that it's going to be a rate cut. I still don't believe we'll get a rate cut this year. I'm still like
I think
sharing. I know the
September.
market.
I think September we've got 25 bips.
What's the CPI this week, buddy? What's the
Yeah.
CPI this week?
Okay. Yeah. But I think September is a 25 basis points rate cut, and I don't think they're going to rush again to cut again in October. In the next one is November. I don't think they're going to rush
So
again to cut in November.
cutting the rates is going to exacerbate the carry trade unwind for Japan. You realize that?
Yes.
And who do you think
I
the biggest buyer of
I
U.S. government bonds are
I
and
don't
holder?
think that Powell is mandated to look at that. I know that Yellen is, but I don't think Powell gives a shit about that. Powell gives a shit about unemployment, and he's getting some recession indicators. There was that recession indicator that flashed the other day. I can't remember what Pearson. I think it's called the Pearson indicator, which flashed the
Yeah.
other day. And the whole market panicked into recession territory. And I think that if Powell's smart, and he is smart, I think what he'll do is he'll say, I'm going to preempt this and I'm going to go with a very gentle rate cut in September. And then I think we get one more rate cut this year, but I don't know if it's going to, I mean, I have to wait to see the data whether it's going to come in November or December. But I think there's going to be, I predict one, but maximum 2 rate cuts this year. And all of them are 0.25. There's not going to be a 0.5. No chance.
Yeah, no, the 0.5 is never going to happen. But
Never going
again,
to
I,
happen.
I think we have to at least accept the fact that there could be no move in September. I mean, as much as everyone thinks there's going to be, depends on the CPI and the PPI this week,
Yeah.
and depends on what happens with Japan's
Look,
numbers as
CPI,
well. Like,
CPI,
here's the problem: if Powell cuts, so if Japan's CPI is a tick above 2.9 or 3, do you think Powell can still cut, knowing Japan now has to raise?
I don't think Powell gives a shit about Japan. I think Powell gives a
No,
shit
they
about
have
the
to, but
US.
you have to, because remember, what's buoying U.S. assets is the carry trade. People will be
That's Yellen.
borrowing yen.
That's Yellen's problem. That's Yellen's problem, not Powell's
Yeah,
problem.
no, I know, but they've got an agreement here, dude. There's no way these guys are not talking to
That's
each other.
Yellen. I mean, Powell has his division to worry about, and Yellen has her division to worry about.
Yeah, but they
And
operate in unison, and that's, by the way, that's why Powell didn't raise rates higher this year, because he couldn't, because the Treasury is saying you can't raise rates higher. Like, that's, as much as you think there's this like Chinese wall between the two, there isn't really.
Can I ask both of you if you think that if it exists, is there an unspoken, live, unlimited swap between the Treasury Department and the Bank of Japan Ministry of Finance? Do you think that's
100%,
honest?
100%. I'm convinced there is, because here's what happened a few months ago. When Japan first wobbled and the currency went to 180 something, they had to step up, and they started putting 50 billion at a time into protecting their currency. Now, the only way they can get that sort of money loosened up quickly is government bonds. And so Yellen, as far as I know, she went there for a meeting, or there was some interaction between the two, and all of a sudden everything was fine. They don't want Japan dumping U.S. treasuries to come up with the cash to protect the yen in the open markets. So what do? You get a swap line. I've spoken to other macroeconomists about this. We all agree that that is exactly what happened.
Yeah, because there's, I mean, who capitulates first? I mean, at what point does the government of Japan start to say, "Listen, we have been scratching the backs of the whole globe, and now it's time for everybody to get on scratching our
When
backs"?
they can't hide the inflation anymore, right? So the U.S.
they
government
can't.
does.
They can't do
You,
it. The
the
problem is they
U.S.
can't do it.
the
They
U.S.
will go
government
insolvent.
the U.S. government hides inflation by at the moment, and Powell said this. This is what Powell said publicly at the hearings. Like, illegal immigration keeps costs down, and therefore inflation numbers go down. But that's just official reporting. It doesn't. All you're doing is you're widening the labor supply base, and I'll tell you why this is important. So by America expanding the labor supply base and keeping labor costs low, you deprive workers of higher incomes, but you keep inflation down. Japan does not allow illegal immigration. Japan does not allow immigration in period. Like, you can't just move to Japan and become a citizen and work there. It's very, very hard. So their problem right now is they're seeing spikes in inflation from labor, and because they can't hide it, there's no that you can't reduce it. And I don't believe that the 2.8 forecast that they have for the next whatever months in Japan is going to hold. It's going to go over 3. And now you're in shit. So the whole thing unwinds at the same time. The moment people realize that Japan can't hide their inflation numbers, America's been hiding it, and we're on a bad track. So it'll unwind.
Yeah. So when inflation, if we do see that, Vinny, what does that mean for the global economy and crypto?
Well, so first of all, it's going to be a liquidity crunch. So the moment, so think about this, okay? The Japanese carry trade over the past, at least the past year and a bit, since COVID and the low rates, as the rest of the world started raising rates, the carry trade moved more to Japan because they kept rates. They kept rates low for years now since COVID. So all the global liquidity that's been sucked out by other central banks raising rates has kind of moved to Japan because you could borrow cheaply there and you can run the carry trade. The moment Japan starts raising rates, all of a sudden that money's going to flow out. And so, do the math. This is such a complex situation. I don't have the expertise or
It is like
experience.
I've been. You're much deeper in the space, and you calling it complex. Like I'm trying to decipher it. Other people in the audience are probably even less knowledgeable about all this. Never heard
Long
of the carry
story
trade till
short,
now.
long
But
story short. Let's summarize. Long story short, Japan is fucked, completely fucked. And how fucked they are is they went and bought up everybody. They went and bought up everybody else's treasuries. They printed money. They used that money to buy everybody else's treasuries and everybody else's stock markets, including their own. So if and when that trade unwinds, it's going to be catastrophic.
is there any healthy way to unwind that trade? Is it just doing it slowly over a period
No,
of time? Because it just
no,
feels like a ticking time bomb.
no,
No.
unfortunately not.
But then why the but then if that's the case, why the
Unfortunately
markets?
not.
Well, if you said that there was a window open, why couldn't they open the window and just buy $3 trillion?
There's no way to unwind this cash and carry trade. There's no way to do it because imagine the Bank of Japan starting to sell down their own stock market. That's effectively what would need to start happening. The Bank of Japan would have to start selling their own treasuries, their own stock market. It's not possible. It's not possible. This yen.
But the impact is beyond Japan though. Like you said,
It's
Japan's economy
everyone.
is fucked.
It's everyone. It's
Yes,
Taiwan.
but then,
Everyone.
It's
but
Taiwan. It's Taiwan. It's Korea. It's up to $20 trillion. That's what I'm saying. No one can give you a number, but Deutsche Bank forecasted at $20 trillion. Okay, like 20 trillion. Imagine $20 trillion of fake money that has been printed in Japan, and they're using this money to buy and leverage other markets around the world.
Yeah,
It's a shit show. It's a fucking shit show.
yeah,
The only thing is
absolutely. So,
that they've
but
promised
Brian,
now.
this is
They've made a
why.
pinky promise not to raise rates.
No,
They've made it.
but this is why Powell's stuck in it. Powell is going to be stuck here because Japan, if their inflation number is high, and they're going to raise, Powell can't meet them going down. I just don't see how that happens. It's going to blow the entire financial world up.
I'm telling you that Powell doesn't give a shit. I'm telling you, Powell doesn't
doesn't give a shit about what?
about Japan. I think Powell gives a shit about inflation, about recession, and unemployment.
So
That's
you don't think that the Japanese government dumping a couple of $100 billion worth of U.S. bonds is going to
that's
mess with it?
that's Yellen's problem, not Powell's problem.
Okay.
I think he cares, but he's limited by his mandate of what he can publicly talk about and what he can do about it. Like privately,
Yeah.
I'm sure he's like the rest of us, where he's like, oh, this is fucking shit show. This is there's nothing way, but he can't. It's not like the Japanese officials. He can't say anything about it.
But guys, like the numbers we're talking about, when you say 20 trillion, you're talking about the same numbers as the 08 financial crisis, and you're saying that it's inevitable. There's no way around it
Yes.
other than implosion. So
Yes.
then,
Well,
Yeah.
I'll tell you what the way around it is. They increased 0.25 basis points now. They shock the market, and then they increase 0.25 again. Then they shock the market again, and then people realize that this thing is going to unwind, and hopefully it doesn't unwind over 3 days. It unwinds over a period of 3 years, and we can mitigate the damage out of it. But or
There's zero appetite for that, Ron. The politicians have zero appetite for that right now. It's all or nothing. Bang or keep going.
well, for now they said pinky swear we're not going to raise interest rates until we do. When there is inflation in Japan, they're going to be faced with, they have two options: increase interest rates or allow inflation to go rampant. Japan has a non-productive population. They have the biggest age. they have the most exacerbated aging problem.
Average A's is like late 40. It's like 48 average age, I think it was.
They're screwed. They are absolutely screwed when it comes to that. That's why I'm saying. I think that our best case here is that I think for the next 6 months until March, we're fine. The next 8 months, whatever it is, till March, we're fine.
Elections.
No, I'm saying it's just saying. I think the Japanese government won't raise rates for the next 6 months. But I think in 6 months,
I don't know how you think that we're going to get past the next 2 months, let alone the next 6 months, without having any major.
Because they made us a pinky promise, Vinny. They made a pinky promise, and they're going to have to hold the pinky promise for 2
between
months.
Japan and the US in the next 2 months, I'll predict before the election something breaks big time.
Okay, I don't agree.
But Dave, thanks for coming up. Like, is there another way around this? Because I feel like if this is a ticking time bomb, the market should start pricing that in. Because now it's clear, the risk is clear. It's like what we saw in 08. We start seeing the kind of the match that lit the fire. We started seeing people early on start liquidating, but it seems here that everyone's just moved on. No one's talking about it. Is there a way to slowly unwind those positions without imploding the market and causing a global liquidity crunch and moving that liquidity into other markets, finding other similar opportunities, similar arbitrage opportunities?
No, where are you going to get cheap money from? This is a cheap money problem, guys.
Yeah,
where are you going to get cheap money from? Everyone else has raised their rates.
The short answer is no, but Vinny's right. It is the cheapest source of money. It's been the cheapest source of money for 30 years. Japan has gone through, they have an aging population. They have the highest savings rate in the world. And those savings are used to prop a debt to GDP that is unsustainable. That said, it's been unsustainable for 30 plus years. And, having been involved, and for those, I'm showing my age, I apologize, but I set up the very first futures trading index ARB system for Morgan Stanley back in the 80s. And the amount of money that Morgan Stanley and Goldman and Salomon Brothers, which is my next firm, made shorting the Japanese market in a coordinated way during that period of time when it was at its all-time high.
Wait, did you? I gotta interrupt you. That is so badass. Sorry, nobody else gets how badass that is. I just have to fanboy it. But
you have no
awesome.
idea, Jonathan, of the stuff that was going on there. You have no idea. There's a chapter in a book that I've been thinking about writing that I may have to out some people, but there's some stuff that went on that is just unbelievable.
You should put a Reddit thread on that, because that would blow the fuck up.
But
I want to hear about it.
In any case, the simple fact is we've been saying the same thing about Japan for 30 plus years, and every once in a while there's a threat to it breaking. And the reason is because Japan has a debt to GDP that's, depending on how you measure it, well over 200%, probably 300%. And people say, well, how the hell is their borrowing cost so low? Well, the answer is the BOJ quietly sits there and buys, and now they have more than half of all the JGBs, that's Japanese government bonds, in existence. And so they continue to prop it up. Meanwhile, their older population has their money in what's called postal savings accounts. It's hard. You can't make this shit up. That is literally what it's called. And that's where there are trillions of yen in those accounts. And then hedge funds come in and borrow cheap yen and buy stuff. And they've been doing this for 30 years. Is it likely to all unwind? No. The government's. I guarantee you. We were talking about this on with Scott this morning. We don't know for a fact because I'm not on these calls. But I asked James Lavish, what is your odds that there weren't phone calls between the head of the BOJ, Powell, and the head of the ECB over the weekend and in both last week and this week and coordinating what's going on? And the answer is zero. I mean, of course they were over there on the phone. And we don't know what was agreed. But the fact is they're going to prop this up as long as they possibly can. But to call this a crisis like 2007 and 8, it's different. It's not like there was a run-up. In 2007, there was a massive spike. In 2005, 6, a massive spike in subprime borrowing with people going further and further and further at the yield curve. That's not happening here. What's happening here is the same thing that's been happening for 30 years. Yen is cheap, borrow it and lever up whatever you're going to buy. And so that's the yes. And the but is, so it's not like a tindering powder keg. There are probably other things in the financial system that can break. And we could talk about those too.
I think net, what I'm learning is that everything works until it doesn't. Right?
That's true.
Yeah,
well, we've seen that repeatedly. We've seen that repeatedly.
Yes, exactly. You've been waiting for it to break for 35 years. It could go on another
And
35
that's the
years.
point. The market can remain irrational longer than you can remain solvent.
So you mean Japan? You mean
Exactly.
Japan could keep low
No,
interest rates for a lot longer?
it can't. Japan has been struggling with deflation in the past. They're at a point now where they're about to go about 3% inflation, and it looks like they could hit that this month. And I just don't see how Japan at 3% to 4% inflation is gonna manage to pay the bills for everyone and make keep all their retirees happy and everything else.
They
This
can't.
is what this is.
And how many times have you heard can't in 35 years? Japan can't do this.
No, well,
I
the
mean,
thing is, Japan is a contained economy, dude. It's very different, right? They import everything. They're an island. They have energy costs which are external. They have raw material costs that are external. The currency devaluation is the worst we've seen. That it's come back a bit right now, and you've got inflation running high locally. It's a perfect storm. Something's gonna break.
it's possible, Vinny. It is certainly
Then
possible.
why the market's not pricing it in? Like there's very intelligent people trading those markets, just like you guys.
Because the yen's trading at 147 and 160 was where the Bank of Japan basically drew their line in the sand. And we don't know what. And if you're a currency trader, I mean, people got. It's very hard to explain this to people who trade crypto. But the magnitude of a move when you have a 10% move in a G7 currency, really G4 is really the four biggest, or the pound, the euro, the yen, and the dollar together. When you get a double digit percent move in a currency, that's like a 95% move in the shit that we
Yeah,
trade.
it's like a four sigma move.
Absolutely.
It's a four
Absolutely.
sigma move.
Jesus.
It's insane, and everyone's using leverage. So when
Yeah.
you levered up 20, 30, 50 times and you see a 10% move, you're gonna get wiped out.
Let me
There,
put
there are
this in the perspective of a retail trader. Okay, the normal forex crypto trader, like if you're in the U.S., you're using a Wanda or forex.com, and they trade in lots, which is 100,000 units of something. And in the U.S., you can trade max. The brokers usually put more of a limit, but max 50x. Okay, so if you've got $100,000 in leverage, or right, like one pip move is worth $10. It's moved over the course of 6-ish days, 650 pips up. Take that times $10 if you're the average retail trader and you're affected by that. That's a lot of bank for the normal retail forex trader.
But the
And
point
remember
is
the
what we talked
Japanese.
about last week. Just to continue,
Yeah.
this is what Vinny's saying. Well, we sit last weekend when we were sitting here on the show a week ago today, and the markets are starting to rebound because of what we worried about. The fear over the weekend, which was clear that was going to be the fear on the Friday before. So now we're going back a week before that, was that one or more hedge funds were blown up. So there were depth charges in the ocean. The submarine hedge funds went boom, and they're going to float to the top. And why that creates such fear is because nobody knows what they have to sell in order to meet their obligations, what derivative contracts will get tied up, what liquidity will get sucked out of the system. The real fear here is the bond market, not the stock market, not the crypto market. It's the bond market. And the real fear is that enough liquidity would be frozen in a bankruptcy hellish situation that would cause a sub-repeat of 2008, because that's what happened in 2008. It was all the plumbing failed because nobody knew that whether they could get their money or not. And that's the fear. And so you have to ask yourself the question, well, here we are a week later, and there may have been some bodies, but we haven't heard a whole lot. And certainly none of the big banks have gone. What Vinny's contention, and he may very well turn out to be right, is that something will happen that will cause that sort of event, which will cascade upon the prime broker banks, which will make plumbing seize up. That's the kind of thing that could cause it. The market basically this week is basically saying, we don't care, and they're shrugging it off. And you can make an argument one way or another. It feels to me that with the bond market below 4% still in our country, maybe the bond market is kind of telling you that they think there's still a risk of that. And that's why the rate cuts are priced in, because people think there's that risk.
Simon? And by the way, I was
Yeah.
just for the audience, I was googling while you guys were speaking. Just the size of the Japanese yen, and it's a lot bigger than I expected. It's sitting at 9 trillion. It's M2 supply, $9 trillion US for the Japanese yen, which is more than half of what the euro is. Didn't know it's that big. Not sure what the renminbi is at, but that's number 3. The yen is at number 3, US dollar is number 1, and euro is number 2. But then the other question I have, and Simon, I'll give you the mic, but it's just it feels like there's kind of 3 ticking time bombs now. I think one of them we're past it, and some of you might disagree. But I think the one we faced during the Silicon Valley Bank collapse, the time-based risk, whatever it was, um, um,
Duration
uh,
risk.
duration risk. There you go. So that one, unless you disagree, but I think that one is no longer a risk now. They're the kind of
No,
the
no,
central
absolutely,
banks.
it is a risk. The U.S. banking system sitting with over $500 billion in
But
losses.
with the interest rates, we're now seeing a reversal when it comes to the
Well, are
central
we?
bank's position.
Are we? So here's the thing, right? If Japan has to unwind and do yield curve control and sell U.S. bonds, well, listen, that's going to get worse. Okay, the losses are going to get bigger and bigger, especially if it's like 10-year bonds, whatever else, longer duration bonds that they're going to be selling to try and get money to prop up their currency. And then we've got, as Dave mentioned, we've got the credit risk spread right now. There's a credit risk in the market which is not being priced in. Nobody knows who's got what and how much it's worth. And whether if one firm goes bankrupt and takes everyone down with them, you're going to have this cascade because what happens is for example, they have to sell certain amount of bonds, push the market down. Other firms are running close to the edge. They're going to go under as well. You can have a domino effect because everyone's using leverage and everyone's on the wrong side of the trade if yields go up. And that's where I'm at right now. I think
But
that
if the
yields
Fed
can go
funds
up.
rate is cut, then that problem is no longer there. It all depends on what happens next month, correct?
The Fed's fund rate will only be cut if U.S. inflation is under control, and there's a view that it's not going to impact Japan negatively because if Japan has to unwind its bonds, Japan unwinding its bonds because the carry trade unwinds impacts the U.S.
Hmm.
in such a big way because it basically impairs the Fed's balance sheet even further because the yields are going to go up on those bonds that they've got and they have to hold to maturity, and the entire banking system has to hold to maturity. Guys, this is a cluster. That's all I'm going to say.
The reason, but just to continue that thought, Vinny, that's why we've been talking about this a lot. The simple fact is that were that to have happened, that's the game of chicken that's being played. There is a reason that I'm sure Powell was talking to at the BOJ. It's because we don't want them selling those bonds, and so we're going to open
Exactly.
up credit facilities for them to do that. The question is how much credit, whether they'll make it public or whether it will be the implied threat. That's all the stuff that we can't know. I mean, honestly, anyone that you could get up, Mario, that could talk about it. I mean, maybe you can get some ex-Fed people, maybe Daniel DiMartino Booth or someone like that to talk about it. But there's a lot going on here, and what Vinny's talking about is something that's very well understood by the people in the Federal Reserve building. They get this, and trust me, they're doing what they can to stop that. That is the stuff they care about. Stock market moving up and down, crypto moving up and down. U.S. bonds being sold to make our borrowing costs go higher. That is literally the thing they care about.
More important than inflation in their
100%.
eyes.
Mario,
Exactly.
Dave,
Exactly.
Vinny, can I ask real quick? At what point? Because here's where I feel like when shit really hits the fan is when you start to see the armchair economists of the publications, news, Fox Business, CNBC, like when they really start diving into this, because it was just a news thing. Oh, yen carry trade. Okay, most people, except for those of us who pay attention to this shit, like they forgot about it. But at what point do the armchair economists or any even the educated economists, when does this start something where they're telling their editors and stuff, hey, we should really get on top of this because this is going to be a huge ass story and everybody needs to be talking about how bad it, like when does this become normal news and then people around the globe start to actually get scared?
Great question. Let me give you the simple answer. Go and watch The Big Short. In The Big Short, two of the guys from the hedge fund, they went to go see the Wall Street Journal guy. And he was like, hey guys, I've got a wife who's doing a master's degree. I've got a kid. I'm not going to put my neck on the line, go to my editor to tell him to write the story. Good luck, with all your conjecture around this market unwinding. And if you look at history, no one puts their neck on the line for this stuff until it breaks. Everything's okay, and I think that'll continue.
So it starts impacting their bottom line when traders, investors, the average Joe starts to lose money from all this. That's when it
Yeah.
starts hitting the press.
Well,
When
it's
it's too
it's
late.
when it's like when we lost Black Monday was a blip. Oh, it went down. Oh, it's back up. It's just normal vol. That's what everyone thinks, and we've kind of gotten accustomed to. It's when it goes down for a day, 2 days, 3 days, 5 days in a row, and it doesn't look like it's coming back. That's when people start going, oh shit. Because in some ways you look at the charts
But
for last
isn't it
week.
a wake up call for all these holders? Everyone's participating in the carry trade opportunity. They're seeing the risk involved in the arbitrage opportunity. So wouldn't they start taking action? Would they start minimizing that risk gradually and deleveraging?
I mean, that's what you would do if you have enough equity in your balance sheet. If you're underwater, you're just basically holding on and praying things bounce back.
Oh yeah, true.
It's
Simon.
again, it's the domino. The first domino to fall, and I even tweeted about this last week. Like something broke in the ecosystem somewhere. We just don't know about it. We don't know where. It takes a while for it to come out. The moment something breaks, and you go, okay, these guys just lost $3 billion or $5 or $10 billion or whatever it is in their hedge fund, and these are assets they have, and they have to sell it. And this is the precious point of the economy. Then you start seeing things unwind. Remember, it took a full 18 months between Bear Stearns collapsing and Lehman Brothers, right? A full 18 months difference. And I don't
Did
think
you say
that
how
we are
many months? How many months?
18. Now,
18 months between what Lehman and Bear Stearns.
yeah, yeah. So remember, it takes a while for the market to figure out what's going on.
Shit.
But I think we're past that point. I think the Bear Stearns moment was last year at Silicon Valley Bank, that whole thing. So I think the 18-month mark's coming up right now because we know all these hold to maturity bonds are not worth the duration risk is massive right now. The Fed's got a impaired balance sheet. The banking system's got 500 billion by
If
most
inflation
estimates.
is, but it all comes down to inflation. If inflation starts to settle for whatever reason, which is obviously hard to imagine
Mario,
happening
the inflation numbers are incorrect. Okay, there's real inflation and then there's reported inflation.
globally, or are you talking about the US?
The US. The
Okay.
real inflation numbers we all know is a lot higher than what they're reporting. And again, this is because you hide inflation by having, for example, increasing the worker base, more
Playing around
illegals,
with.
50 million illegals coming in to work, whatever, it brings down inflation numbers. So this is my point. Like, inflation doesn't escape from an economy just because you can show the official numbers coming down. It just goes to other places. So it goes into rents, it goes into other things. So the government trying to hide inflation by manipulating the supply of labor base doesn't take away inflation; it just moves it elsewhere.
And you do believe the numbers coming out of Europe or same issues the US?
I'm not a Europe expert, but right now I'm just focusing on Japan and the US, to be honest.
Simon? Simon, I know that's the argument for gold being a store of. Actually, a question for you, Simon, and others on stage. So, what does that mean for Bitcoin, and then what does that mean for the rest of the crypto market?
Yeah, that's the very interesting question. So I think it's quite clear from this conversation the level of degeneracy our economies have gone thanks to complete removal of market forces and central banking. So we all live in central bank markets and nobody cares about the reality. They just care about what the Fed does. The Fed has completely occupied and taken over all of these countries. At the same time, we have this very interesting, demographic issue as well. So politically, everything's about the horrors of immigration, and yet the strategic advantage of both countries in Europe and America is that they're actually able to attract immigrants in order to solve demographic issues that a country like China and Japan have a lot more problems. Now, politically, this has become a complete hotbed topic with the desire to do mass deportations and demonize immigrants. So this is just fascinating that we've hit this level of disjointedness in the realities of the market, central banks, and some of the more political issues to create this perfect storm. And let's not forget that we've got the geopolitical risk to add to that equation, that China can decide, do I want free markets and do I want an unwind of the credit? Do I want to be more interventionist? Or do I actually want to be more like America and more like Japan and intervene in markets way more aggressively? That's just a fascinating thing we all have to watch. Now, the real question, does all of this leverage now apply to Bitcoin because of the ETF market? Is there some wild trades that we don't know about in the Bitcoin market from some of these hedge funds through the ETFs and futures? We don't know the answer to any of this stuff. And so we get to see, is Bitcoin just going to be risk on, risk off? Because we know the narrative, we know that it is actually a solution to the central banking problem for those that want to exit. And it's also a solution for those that want to combat inflation and civil unrest. So we get to see the narrative roll out in real time. And my guess is that the 4-year cycle prevails, but we haven't had the real test, and this is the real test, and this is why there are still asymmetric returns in Bitcoin. Is it going to go with the commodity market while the crypto market goes with stocks, or is Bitcoin going up going to drag the crypto market with it and create an exodus out of traditional asset classes over to this sector? I think, all interesting things that which is why there's still so much more to go and so much more to understand in this cycle.
Dave?
Yeah, I mean, I think that Simon has his finger on the key issue here, which is the asset value of Bitcoin that's being told to American investors in the ETF world, and we kind of take for granted that Bitcoin is a diversification against, disaster risk, right? That, make no mistake, that's what it is. I mean, the whole digital gold narrative is, gold is going up. Well, gold is going up because people are worried about what's going on with all the central banks and debasing currencies, and Bitcoin is that on steroids if it in fact gains that critical mass of acceptance. The thing that's interesting, and I keep talking about this, and Mike McGlone and I have this argument most every week, is I keep explaining that Bitcoin has core holders and buyers who buy this for the same thesis that Simon has done far earlier than me. So he's done a great job there. But I'm only there for my 7 years, so I'm a tourist, I guess, by comparison. But the fact is that narrative means that that's where the real value of Bitcoin will be. And the people who are quote hodlers they're saying, listen, if it doesn't 10x, don't even talk to me. Meanwhile, the price action is driven by speculators using leverage on perp exchanges around the world. Full stop. And we see it time after time, whether it's on the upside or the downside. I mean, just look at the market today. The market's rolled over. The stock markets are down, 30 basis points? Bitcoin dropped, what did it drop? $2,000 lower than where we are now? All in one day. I mean, it happens all the time. It's because the marginal buyer or seller now are leveraged speculators while the holders are still there. Yet the holders or the long-term buyers are the ones who have been driven, the market into this price range, and are the ones who will reassert the 4-year cycle if Simon and I happen to agree with them is correct. And so that dynamic is happening. At the same time, we are clearly seeing fractures in the fiat system. People always have to put it in perspective. The fiat system has only really existed as a global system since 1971, right? That's not that long of a time in terms of economics, but it encompasses the entire investing life for almost everybody who's investing, myself included, right? So we need to understand. So we talk about things like Japan, we talk about the Federal Reserve. It takes a lot more money now to make an impact than it did 10 years ago than it did. And, it's been exponentially growing. And that is the reason why when Simon mentioned the asymmetric return potential profile of Bitcoin, it's because of that. I mean, it takes billions to do what millions used to do. And that's important to understand.
Yeah.
I think it's worth mentioning, Dave. I agree with your points there. The issue really right now is, for me, is market depth and liquidity. So Bitcoin's always historically acted as a liquidity sponge in good times, and when things go bad, it was when we have low liquidity, Bitcoin tanks. At some point, there may be a flip over where it doesn't actually matter. But for now, I think it's entirely tied to the global liquidity situation, because people who hold Bitcoin in their portfolios, if things unravel, they're going to sell it. They're going to have to, whether it's for margin calls or whatever else. And that's the issue right now. It's still a bit of a savings account for a large percentage of the world right now. It's about a $1.6 trillion market cap. And I just don't think that I don't think Bitcoin is going to be immune from any
Oh,
downswing
absolutely
in
not.
global
No,
equities.
Short term, and long term.
no, short term, not long term.
Okay.
I mean, all you have to do is
Yeah.
look at my favorite example. I've used it on this show before. If you look at home stake mining, because remember, U.S. citizens couldn't trade gold in the 30s during the Depression. Everything went down, and then as the depression started grinding lower, but the major shock was over, home stake mining diverged completely because what money there was attracted into it, and so Bitcoin could be like that. I often say it will be like that, but the weekend, the day, the month, even potentially. I mean, it took 3 months in the GFC for gold to delink. Gold went down with everything else in 2008, but
Exactly.
3 months
Exactly.
later it delinked and then went on an epic bull run. And
So remember, Bitcoin is a risk. It's a risk on asset, not a risk off asset in the current climate. So if people go risk off, Bitcoin's going to go down, and if people go risk on, Bitcoin's going to go up. And if we have a financial crisis and everyone goes risk off, it's going to come down with everything else.
I mean, that's right. And but I think that Ethereum is being positioned as more of a risk on asset than Bitcoin. And I think it was
Yeah,
really
with
Absolutely.
the with the yeah.
Solana is actually Solana's been taking their spot now. I was actually chatting to a friend about that this weekend, and a trader buddy of mine, and like it looks like when the market's rallying and there's excess liquidity and people trying to diversify, they're not going to Ethereum, they're going to Solana now. And then when the market pulls back, Solana comes back down as well. So Ethereum is a lot more stable, and Solana looks like it's jockeying for liquidity right now.
Well, that's within the crypto space. But now that there's an Ethereum ETF, don't underestimate. I mean, remember, half the world's investable capital is still in the U.S. for reasons that are, well, there are lots of reasons, but that's just a simple fact. And the fact that Ethereum
Sure,
has
no, but
outperformed
VanEck
Bitcoin
just
over the
filed.
last week isn't that really that surprising? It got crushed.
Yeah,
It went down much further when there
VanEck
was.
just filed for VanEck filed for a Solana ETF now, and the SEC withdrew their case against Solana. So
No,
now it looks
they
like
did.
Solana ETFs
No,
are going
no.
to be coming.
Sorry, all the crypto Harris
Did I miss
fans
something?
think that's true. That's not true. What the SEC, and I'm not the lawyer
Okay.
here, but let's explain this really quickly. What the SEC did is they have multiple cases, and the one with the most hostile judge is the one where they pulled Solana. They didn't pull it from the other one. They only pulled it in the Binance case. They have not pulled their
Okay, only one.
Solana's
Okay, I thought you
security in
pulled
the
from both.
Coinbase case. If the SEC, if Harris actually is convinced by the various people to make a pivot, you will see the SEC drop their cases against Coinbase and Kraken, etc. And then those of us, and I am a Solana bull. I'm not going to lie about that. I mean, we're not. I own more Solana than Ether for all the reasons that you're mentioning, but you have to be realistic about it. The fact is until the SEC pulls those cases, you're not getting a Solana ETF.
Yeah, I've just checked. By the way, I saw Punk in the audience. Punk 2520. I'm like, what happened to Punks? They're down bad. So I know it's irrelevant to the discussion, but that was not a nice sight here to
But
see.
but that gets to Vinny's point, which is what I think is real. When Bitcoin and the Bitcoin community goes up, it creates liquidity for everything else in the ecosystem, and people recycle those dollars. So-called alt season. How many times have we all heard that, right?
Mm.
When Bitcoin's been in a range like it's been, and you can go look at it, Bitcoin is now at the exact same price as it was at in February, and it's been in that range, pretty consistently for 6 months. There's no alt season when there's no more money being pumped in, and at the same time, liquidity conditions around the world are worsening. That's the issue, and that's what Vinny's talking about. I just think that within the crypto space, Bitcoin will be the most resistant, but nothing is fully resistant if, in fact, we have a
You'll
recession.
need yeah. So but if I ask you to speculate what could happen, best case, worst case scenario over the next, let's say, 12 months, could we see the cycle repeat previous cycles, or with what happened in Japan and what's happened on a macro perspective? It all depends on the inflation numbers, the unemployment numbers, and what the Fed will do.
I personally think that there will be a significant rally in Bitcoin once we see what's going on with the elections and once we get into the fourth quarter.
Why the election? Why the elections? If Kamala's changing her stance about crypto and Trump is obviously pro crypto, why do the elections still
It's
matter?
No, she's
because
not. No, she's not. She's not
that
changing stance. She's just pandering to voters.
That's and that's
Yeah, but
the
you could change. But no, but you can't. You don't. You change your stance on crypto if you're pandering for voters. Or you're saying she'll say she's changing her stance, but she doesn't actually change her stance. That as soon as the election is over, she'll go back to being anti-crypto. Is that what you mean?
I think that was Vinny, and I agree with him. I think, look, we don't know what's going to actually happen, right? She changed her. She agreed with Trump on no tax on tips, which is rather amusing, and the reason for that is because Nevada is such a pivotal state. But let's not go into. I don't really want to do a political spaces. All I'm saying is that if the market genuinely believed that Trump had a 50% chance of winning, and he was going to do the things that he said he was going to do, Bitcoin would be a hell of a lot higher than it is today. It's not priced in. So the market is placing a wait and see. And so as we get closer, those sorts of bets will start to take shape.
Yeah.
That's
So based on Polymarket, Kamala's at the highest I've ever seen her. I'm using Polymarket because that had Trump ahead. We're not getting to a political space. We did that last. I think it was last Friday.
but Mario,
Trump
but it
was.
is important. When Trump was at 70%, it was not enough to bring bring Bitcoin to new all-time highs. And the reason is because
But that's
people
because
looked at it and
maybe
they
people
said,
expected the swap.
because people look at that and say, it's too early, right? Let's figure out let's get some real. The Democrats haven't even had their
So the
convention. They
Trump.
don't
So
even
what
have
you're
a
saying? What you're saying is that the Trump rally, we got a taste of it when the assassination attempt happened, when the debate happened as well. So we got a sense of what would happen to crypto if Trump wins. But it's just too early to experience a full-blown bull market, especially now seeing Kamala ahead in the polls. You can believe them, not believe them. I don't want to get into that debate. And based on Polymarket, Kamala has a 52% chance, and Trump is at 46% chance. Michelle
all of
Obama's
that
at
is true,
1%.
and it's at the same time, Mario. Understand, portfolio rebalances always happen in the fall, and it gets setting up. The summer, people don't make big decisions. Expecting there to be major moves in markets over the summer, other than downward black swan surprises. We've had a few of those in the past, August ones, etc. They generally recover, and then the real shit happens late September into October, and it's a seasonality thing. And we'll see. I mean, it could very well be that a spike in one day to VIX of 60 is a foreshadow for some real surus in October. That's Vinny's case, and he may be right. We'll see. But there's a lot of things to happen. And Simon's right. There's a lot of geopolitical things that could happen. The fact is, when you're sitting in August and half the people who trade are at the beach, myself included, you just don't get that kind of real big money action. You get twitchy reactions because of an illiquid market.
Yeah, the numbers are just for anyone that's been watching Polymarket. We've used it a few times. Trump at 70-something%, just before Biden dropped out, and now it's down to 46%. But just going back to I think we've discussed this pretty in depth. You talk about the carry trade. I think the next time we'll bring it up is when the markets start to jitter again, and we get the inflation numbers later today. But it's a pretty fascinating predicament that we discussed on where the central bank stands, where the Fed stands in the US in terms of not triggering another panic sell based on the carry trade, another round of liquidations versus keeping inflation in check. But let's get into the discussion with our partner, Mitch. I appreciate you being patient. I know you've been waiting for like 20, 30 minutes on stage. How are you, man?
Yeah, good, thanks. How are you?
Good, man. Good. Thoughts on the discussion?
Sorry, go again.
Thoughts on it? Your mic is echoey, by the way.
Yeah, just 1 second.
Cool. I'll let you fix that. Change channel. By the way, we're gonna have a discussion with Zerk. Mitch, I'm hearing myself double. Can you just turn off Bluetooth? Mitch, you there?
Sorry about that, fellas. I just had to put another phone outside.
Cool. Okay, you were listening on another spot. No, I can still hear myself double, man. Can you turn off Bluetooth?
Okay.
We need to put that as a rule. Make sure all sponsors turn off Bluetooth. Do you turn it off yet, man?
Bit better?
No, bro. I hear myself double.
Righto. 1 second.
Cool. 30 seconds. And while you're doing that, let me just mute you for a second. Dave, I'm going to be selfish. I'll ask you another selfish question to you and Jonathan. We've talked about Bitcoin, but if you look at the risk on assets in crypto, if Kamala wins, is that so? How bad is it for crypto? Do you think it could derail the bull market that we're all anticipating?
Well, from our StockTwits users, which we do have a very broad amount, like most active, most active, I forget what her tagline is, the most active investor trader platform. People are not buying the if Kamala switches, people aren't buying it. And also there's a good chunk that are
not buying it yet. I just add not buying it yet. Just want to be clear. Yeah, I think if she, I think we had a whole debate on it on Friday. If she does more, if she starts taking action, and some people kind of listed a few of these actions that she could take, if she starts taking action, then that could change their perception. But at least what we've seen so far, they don't think that she's really changed her mind.
Correct.
Yeah, but
I think that's right. Look, you need to bifurcate. There is a very real chance that the people who are advising is you have to look. It's not crypto degens that are advising the crypto Harris movement. It's Mark Cuban and Scaramucci, etc. You could easily see a soft pivot. I don't know what the right words for it are. Where effectively they take their hands off of the spot markets in the U.S. for a subset of centralized exchange traded stuff, and that's it. And still come down on DeFi, still come down on self-custodied wallets, still come down on the ethos that is crypto. Now, what does that mean? That means they wave the white flag and say, okay, all the FUD we've been saying for years about Bitcoin is bad. Bitcoin is okay as long as we can monitor it and control it. By the way, I'm not painting a rosy picture here. I just want to be clear. This is not me being devil's advocate. This is a very reasonable possibility. To try to minimize the damage of crypto voters in the U.S., basically back off Coinbase, back off Kraken, back off Bitcoin, back off Ethereum, and potentially back off Solana and some of the other ones. That is not great for crypto entrepreneurship in the US. It's actually pretty bad for it, but good for some of the assets. It is not great for a lot of the projects and the things that you are invested in and care about in terms of US money. It just means it all goes and stays offshore. So it's a very complex thing. To me, that is what a pivot's going to look like. I don't think it will ever go beyond that. Now, it may not even go that far, but that's kind of the point. And we don't really know until we start seeing platforms from them and things that will take shape over the
And is that, in your opinion, is that enough to derail hitting all-time highs again this year or next year?
No. Well, if we're talking Bitcoin, no, not enough. If in fact that kind of pivot happens like I'm talking about, where the anti-crypto army is disbanded and they tell Warren to shut the F up and we're going to do this stuff. But don't worry, Liz, we're not going to, allow self-custody wallets without lots of KYC and AML and all sorts of stuff that we'll want. That's not going to hurt Bitcoin, but it will have repercussions in terms of the way the markets work. And there will be there's a lot of possibilities there, too many to unravel in a 30-second explanation. All I'm saying is, to me, that's the extent of what a crypto pivot could look like. And since we don't know if that's going to happen, it's really hard to prognosticate.
Jonathan?
I'll go with I'm smiling here because this is sometimes an unpopular thing to say because some people view technical analysis as something fanciful. But from a time cycle perspective, I'll just say it doesn't matter. I'm a purist when it comes to technical. Well, it's a 98% purist when it comes to technical analysis. That, like the news here, if you believe in the cycles and structures of how things move, doesn't matter either way. It's if you want something that is positive and rosy, that's about as positive and rosy I can make it. Is that it won't matter.
Let me dig into the discussion on Zerk. Mitch, are you back? Is your mic working?
Yeah, mate. Sorry about that.
That's right, man. But the issue's still there because I'm hearing myself double. Is that you tried using another phone?
Yeah, might have to. I'll try that. Sorry about that.
That's all right, man. What we could do is, if you're free tomorrow, man, we'll just bring you back in tomorrow. When this issue's fixed, we'll probably get you with tech support to make sure that the mic does not echo, and we'll just do it again and have it prepped in advance. But yeah, for anyone that wants to check out Zerk, I'm gonna quickly give it a quick shout out here since we have to reschedule them. But essentially, it's a Zircon gemstones. I had a lot of questions for you guys. Tokenized Zircon gemstones. That's a very brief overview. They're built on Polygon. We're going to get into a discussion with them today as a sponsor of today's show. but obviously we're having technical difficulties. So we're going to be rescheduling them for tomorrow. We'll get Joe back up to get his thoughts on the discussion, and we can wrap it up. Also, I see Benjamin Cowan in the audience. Been a while we haven't had you here, Ben, but last time I remember we spoke, you were talking about how you see another kind of a just complete carnage when it comes to altcoins. I think we talked about this months and months and months ago, and that carnage did happen. So you ended up being right, and I ended up losing a lot of money. So congrats, Ben. But Joe, would love to get your thoughts on the discussion, and Simon, before we wrap up the show. Joe kind of glitched out as well, Simon.
Yeah, I was just going to say, probably beyond the scope if you want to close the show off, but there was a story that hit the docket in the court over the weekend with the Celsius estate suing Tether for 57,000 Bitcoin. So we can cover that on another show if you like, but I just want to, if you want to cover it, we can.
What was the issue? What was the story? Sorry.
So the Celsius estate had a series of, they're coming back for the collateral because there's a rule in bankruptcy code where all transactions that happen 90 days prior to the filing are subject to clawbacks and preferences. And what was happening is Tether liquidated approximately 57,000 Bitcoin from client money in order to unwind the loan. So obviously Tether managed to walk away with the vast majority of the estate, which was a big reason for the loss that was locked in for creditors. And so there's a pretty interesting sequence of events, and it also ties in with the fact that the strategic reserve assets that the US is trying to use at the moment, 95,000 of them actually belong to Bitfinex shareholders. And obviously the DOJ is holding on to those at the same time as finding out what the settlement will be between the Celsius estate, Bitfinex, and Tether. So there's a massive bit of a circle jerk happening around that transaction, which we can cover another time.
DB Crypto just shared it above. I tweeted about it. My team did. I wasn't aware. We could probably touch on that a bit tomorrow. Joe, you're on stage. How are you?
Yes. Good morning. Hope everyone's doing well.
We are. I know you covered. By the way, I want to speak to you because I know you were covering the whole the Black Monday fear with Danish before we kicked off our space early on. So maybe getting your quick thoughts on this. We didn't get you on our stage. But getting your quick thoughts on this and the discussion today on whether you think the worst is behind us or not, and then we can wrap up the space.
Yeah. Personally, I do. I know that's not really the conventional wisdom. Some of the traders that I've talked to have said significant positions were unwound. Forcibly unwound, right? It wasn't even unwound by choice by the market participants. The margin clerks were tapping them on the shoulder and saying you have to sell, and that's consistent with what we saw, right? A sharp down tick that was instantly bought with big institutions, heavy buying coming in right at the open. Look at the intraday action on the Nasdaq. You think you see that. So I think it's consistent with people, taking advantage and playing games with leverage, and we know this in the crypto market, right? You had a ton of participants betting on the fact that the yen could only fall against the dollar, and guess what? Whenever someone says it can only do one thing, the market tends to move the other direction. It's swift, violent reaction. The good news is that, we're several days later and you haven't heard about a major firm going under. You haven't heard, that a hedge fund or even a minor one lost their shirt and were carried off the floor. That's good, right? That's bullish. The longer that goes on, the easier it is to unwind positions, the easier it is to pivot and react and to anticipate. So to my, barring some other rapid, devaluation of the dollar against the yen, meaning the yen surging, a repeat of that, which would repeat the process all over again. I think you're out of the woods for the near term, and I think that's why the market's been on a straight up rip.
If the Japanese central bank does raise rates again, and they break their promise, how do you think the market would react? Could we see another round?
Yeah, I mean, if that interest rate differential widens, right? I mean, if that happens, right, it's not going to be bullish, right? They're the lending currency of the world, right? And people, I think they were presenting this incorrectly. They're presenting it like, this is the yen carry trade that gets unwound, right? And the reality is that it will always be put back on because the Japanese will have the lowest interest rates for the foreseeable future because of the construction of their bond market, with the majority of his owned by the Bank of Japan. And that's not going to change. This is 10, 20 years in the making and probably going to continue for the next 10 to 20 years. And from my standpoint, I think people continue to look at this like a one-off emergency event when really it's par for the course. These periods of deleveraging come and go, consistent with bullish trends. And to me, I think that unless you see a firm actually face systemic risk of going under due to the trade, there's really nothing to worry about.
I appreciate that, Joe. All right, I think we've covered this topic enough, and we went overtime today, so I appreciate you all. We'll see you again tomorrow, same time, and for the Zerk guys, we'll get you on tomorrow with the mic working. Thanks a lot, everyone, and thanks for Joe ending it on a positive note. Bye, everyone.